Welcome back to TakePropips, your go-to channel for everything Forex trading. In today's video, we're going to dive into one of the most crucial aspects of Forex trading, analyzing currency strength fundamentally. We're going to break down the top 3 ways to analyze currency strength from a fundamental perspective, so you can make better informed decisions when trading. And stick around because I'll also be sharing a helpful tool that could enhance your trading strategies, especially when it comes to currency strength. So, let's get into it. The first way to analyze currency strength fundamentally is through economic indicators. Economic indicators are key data points that reflect the health of a country's economy and its currency. One of the most important indicators you should look at is GDP, or gross domestic product. When a country's GDP is growing, it generally reflects economic strength, which often strengthens its currency. On the other hand, a declining GDP can weaken a currency because it signals poor economic performance. But it's not just GDP that you should monitor. Interest rates, inflation, and unemployment rates all play major roles in a currency's strength. Higher interest rates tend to attract foreign investment, as investors seek higher returns on their money, which strengthens the currency. Inflation is another key factor because if inflation is too high, it erodes the purchasing power of a currency. Low inflation is typically better for a strong currency, but watch out for deflation as well, which can indicate economic stagnation. Now, it might seem overwhelming to track all of these indicators across multiple countries, especially if you're trading pairs like EUR, USD or GBP, JPY. This is where having a tool like the Trading Management Solutions EA from TakePropips can come in handy. This expert advisor has a built-in AI feature that analyzes economic data for you in real time, giving you a clearer view of how these fundamental indicators are affecting currency strength. You can save a lot of time by having these key data points available at a glance. And since it supports all 28 major Forex pairs, you'll have no trouble keeping tabs on any currency you're trading. The second fundamental factor to analyze currency strength is through monetary policy. Central banks play a massive role in influencing a currency's strength. Their decisions about interest rates, money supply, and overall monetary policy can make or break a currency. For example, when the US Federal Reserve raises interest rates, it usually causes the US dollar to strengthen. This is because higher interest rates lead to higher yields for bondholders, making the currency more attractive to investors. But it's not just the act of raising or lowering interest rates that matters, it's also about the expectations. Market participants often move based on what they believe the central bank will do in the future. Therefore, paying close attention to the statements and reports released by central banks can give you a strong edge in predicting currency movements. Now, keeping track of these central bank announcements and predicting how they might affect the market can be challenging, especially when you're trading multiple currency pairs. That's where the TakePropips Trading Management Solutions EA shines again. It not only tracks economic data but also gives you updates on central bank policies and economic news, which can significantly influence your trading decisions. Having this kind of information fed to you in real time is invaluable. The third way to analyze currency strength fundamentally is by looking at trade balances and capital flows. A country with a positive trade balance, meaning it exports more than it imports, typically has a stronger currency. Why? Because foreign buyers need to convert their currency into the exporter's currency to make purchases. This creates demand for the exporter's currency, thus strengthening it. On the other hand, a country with a large trade deficit, meaning it imports more than it exports, will likely see its currency weaken. The same goes for capital flows. When foreign investors are putting money into a country's assets, like stocks or bonds, they need to convert their money into the local currency, which strengthens it. But if capital is flowing out of the country, the currency can weaken. Capital flows can be a bit more complex to track, but again, having the right tools can make all the difference. With the currency strength meter inside the TakePropips Trading Management Solutions EA, you can easily identify strong and weak currencies based on real-time data. It gives you a clear view of capital flows and trade balances, allowing you to make more strategic trades based on fundamental analysis. Let's recap. Economic indicators like GDP, interest rates, inflation, and unemployment give you insights into the overall health of a country's economy and can help you assess currency strength. Monetary policy decisions from central banks heavily influence currency movements, and staying ahead of these decisions can give you a significant edge. Trade balances and capital flows show how much demand there is for a country's currency, based on its trade surplus or deficit and its level of foreign investment. By integrating these three key areas into your fundamental analysis, you'll be in a much better position to predict currency strength and make profitable trades. But here's the thing. Analyzing all of this data manually can be time-consuming and prone to human error. That's why a tool like the TakePropips Trading Management Solutions EA is incredibly helpful. It automates the process of gathering, analyzing, and interpreting fundamental data, giving you a clearer picture and helping you trade smarter, not harder. If you're serious about improving your forex trading, it's worth giving the TakePropips Trading Management Solutions EA a try. It combines powerful AI algorithms, automated trade management, and a currency strength meter to make sure you're always trading with the best possible information. And the best part is, you don't need to be in front of your screen 24/7. It does the heavy lifting for you. So, if you're ready to take your trading to the next level, check out TakePropips Trading Management Solutions EA today. You can find more information on our website, TakePropips.com, and start making more informed, profitable trades. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell so you never miss out on our latest forex tips and tools. Happy trading, and I'll see you in the next video.